Good morning, good afternoon, good evening, and welcome to Martyn Lucas Investor Season 4, day of FOMC reports. And as you can see, the market's pumped all the way up this afternoon, this morning. A little bit of a sell-off at the moment, but that's absolutely fine. No issue there. What are we all looking for? Well, I see some people are looking for a 0.5, but what we're really looking for is a 0.25 because that's what the markets expect. That will give stability because inflation could peak again and we could have a Paul Volcker situation of raising rates again, and then that would send the stocks and the country into a potential recession. So we don't want that. We want a 0.25 steady as she goes. It's not completely out of the woods that we get a pause. Don't think so. Most people think a 0.25. I reckon a 0.252. And that's what I'm hoping for. Okay. Now, some people have asked in the chat, James Turner, what time UK is the actual cut? The rate cut will be in 28 minutes. Robert, James, are you still with me in the chat? Yes, Turner, are you here? Hopefully you just heard that. I just gave you the information. So, Iberian Wolf, funwear to 15. We are covering funwear tonight. In the last hour or so, I did get a request to do also on the extra channel ACHR. I haven't confirmed that I'm doing that yet. So stand by for that. I haven't decided if I can do that just yet. There's only so much I can do in a day. I can do 4 earnings a day, but we only found out about it a few moments ago. About an hour ago, in fact. Sometimes I can jump into it quickly like the other night, but that's a different situation altogether. Okay, we've answered that. Hi, Leah. Hopefully you are having a great day. I always forget you're in the background watching. Sorry about Martyn keeping up election night. I just heard her actually walk in. She's just been shopping. She's been to Kroger to buy some groceries. So she will, I'm sure, pick up that in a minute. But there you go. Says Mike. Hi, Mike, Mr. Bond. How you doing, everyone? Let's go. 0.25 is what I'm hoping for. Antonio de la Cruz, not 0.5. Antonio de la Cruz, what was the stock you requested this morning? There was something you wanted me to look at. What was the stock that you wanted me to look at this morning, briefly? Can you remind me? I think it was... Was it AST, Space Mobile? Just remind me what the stock was you asked me to look at this morning. I did it, of course, but that's not why I'm asking. If you can just tell me, that'd be great. Glad I bought around the IPO. IonQ, said Sid from the Netherlands. Reddit is soaring. Indeed it is. Lucas A's, Dub James 007. 0.5. No, it'll be a 0.25. I'll tell you what, we'll do it again. We had a poll running this morning. Here we go. Give you a quick chance to decide. Rate cuts. There we go. Pause. 0.25. 0.5 or undecided. There you go. Start a poll. Put it in the chat for you. Steve Wally, good afternoon. Henrik, good afternoon. Funwear to 15. ASTS. That was it. ASTS. You asked me to do the earnings. Hang on a minute. I'm confused now. Hang on a minute. Yes. You asked me to do the earnings, didn't you? That was right. Fun. Yes. Okay. That was tonight. Right. That's on the 14th, isn't it? Yeah, correct. I'm just thinking out loud. So for you, Antonio de la Cruz, you asked me to cover ASTS. So I did, and it also has now its own video. There it is. If you want to go and share that for the earnings and all the rest of it, you can. It's there for you. So I'll give you the link to it. This has just been done. Share, copy. There you go. So this is for you, ASTS. there is your video. All right, so if you want to watch it, leave a like, leave a share, do what you want with it. There it is. It's all done for you, okay? Let's come back to here. Dogecoin to $1, says Mike. We shall see. Right. Let's get ready. Now then, I've got a poll running. I wonder if that's up there on X. Nvidia rates vote. Oh, I did put it on. I've done it already. Okay, we've had 20 votes. Not that many votes so far. Okay. Let me repost that. There we go. Let more people know that we're doing a rate Fed report. I'm expecting a big audience for this one. I hope so. Anyway, keep an eye on it. Let's go through all our positions. Just a few minutes to go before we cover the event live.
Workers who are active across our more than 140 categories of work, 10,000 skills on the platform. So these are buyers looking for incredible folks who can do long-term complex projects for them. The talent side of the equation is skilled freelancers with these professional skills really across.
Okay, just listening into the news, see what's going on. We've got the S&P is up today. S&P Global up, Virgin Galactic down after the earnings promised another year at least. This has been going on for 15 years now, since they originally started, before they were public. People are just tired of waiting, I think. Anyway, stock's gone down again. Palantir down today. Gold is up. Amazon is up. Apple up 1.89. And next year energy is down. Enphase Energy is down today. Again, the Trump trade, we talked about that. Coca-Cola just going sideways at the moment. All I want it to do is stay sideways until January the 1st, when I can put more money into my Roth, and I'll be buying another $8,000 of Coca-Cola. J&J down. Chevron down. Tesla up, but just trimming back a bit. Rivian, I believe they're doing an earnings tonight, aren't they? Yeah, today after hours. Not expecting much from Rivian at all. McDonald's up today, 0.42. Google up 1.46. This is what I'm expecting to happen, and I'm 100% about this. I'm not even going to say I think it's going to happen. I'm 100%. I'm going to say that the Mag 7 are going to trim after the FOMC, and it's going to go straight back into Coca-Cola. Defensive stocks, and particularly Coca-Cola, have been sold, and they're oversold now, in my opinion. And I think what will happen is the Mag 7s will sell off and buy back Coca-Cola. Then it'll come back up again with the profit from Coca-Cola. That's what I think is going to happen. So either way round, I'm going to win. Just got to have patience. Nvidia, I told you today was Nvidia day. Some of you didn't believe me. Well, it is. FOMC is Nvidia day, 147. I said it would go through 140. It did, on the way to 200, which it will. So I'm very, very happy with that. IonQ, 34%. 34% on IonQ. Incredibly overbought, overvalued. Way too expensive. But congratulations if you own it. Plug Power, Bitcoin, up to date 76. XRP, 55. Still not doing anything, is it? Funware, we're covering that tonight after hours. Arch Aviation, I'm trying to. I haven't made that commitment to do that yet. Is DJT a good stock to buy? No, it's not. There's no. Well, if you're a gambler before the election, yeah, but not now. It was simply a trade, a popularity trade up to the election. Now it's not. There's no fundamental value. The company, it's only a holding company. It's just a bucket of cash with the promise of buying a business. That's all it is. It doesn't actually do anything. People bought it just because they want to trade it for like a popularity contest. Lots of people, most people lost money. Jerry and Elba, you sent me a text. Thank you very much indeed. I was looking for you this morning. I was looking at NU for you this morning. Unfortunately, I didn't see you in the chat. I was calling out for you. but unfortunately I missed you. We haven't got time to do NU again now because we're about to go into the FOMC report, but I will try and pick it up again for you, but unfortunately you wasn't here this morning, but thank you very much, and hopefully I'll be able to look at it again. Let's have a look. Jerry and Elbow here. Lovely to see you. Hit the like button, everyone. Thank you. Yeah. What we want to do is we want this to be a popular event. So what we're going to do is we've got 19 minutes to go before the result. So what we want is to get 100 likes so we can get suggested on YouTube. All right. So let's do it. Here we go. Are you ready? Here we go. We've currently got watching 68. We're just starting out. 68 watching. There you go. You see it. And we've got 6 likes. Let's refresh it. The most we could have is 30 because 50% of people aren't signed on to Google, just the way it works, unfortunately. 23. So we're moving up. There you go. 23. Let's keep going. We've got 66. The most we could get now is 33. So maybe another 10. You ready? 5, 4, 3, 2, 1. This can suggest the video out to more people. 29. There you go. See? Let's go again. 5, 4, 3, 2, 1. We're now up to 33. See that? Look. I know my analytics, don't I? Okay. 76. It's starting to move now. The FOMC report is just a few minutes away now. 33. Thanks for your subscribing, Yagi. 33. We want 100 likes so YouTube suggests this out so we can start to grow this video online so we can get everyone talking about it. 41. Oh, we're moving now. 41 now. Let's have a look. Let's see if we can get it up to 100. 41. 41. How many are watching? 66. That's very good. I'll come back to it in a bit. That's way more than I deserve at that point there. So that's very, very nice indeed. Okay. All right. Now then, let's come back to the positions. NU, do I think it's a buy? Let me just look quickly for you again. I can do full reviews, but I'm not doing full reviews at the minute. But I'll give you a quick look. Jerry and Elba wants to know about NU. Is it a buy? Well, let's have a quick look. It's been rallying recently. Looks a bit like the S&P 500, with the way it trades. Let's have a look over the 12 months. It's had a dip. It's an all-time high at the moment. Don't mind buying an all-time high. Not a problem with that. Let me have a quick look down. Digital banking services. Let's have a look. The price to earnings ratio, it's very expensive, 46 times earnings. Is there a dividend? No. So it's expensive. It's moving up. Next earnings is November 13th. November 13th. If you do a $5 super chat, Jerry and Elba, I will cover the earnings for you. As a member, you can do that. If you are a member, you can request an earnings for $5 and I'll cover the earnings and make a promotional video on it and research it and all the rest of it. So I can do that for you if you want to do that. November the 13th spot is available. No one's booked November the 13th at the moment. So you have that opportunity. Right. Let me just look at this. Let me come back into here. Let me look at the valuation. Just doing this for one of my members. It's not a full review and just wants to know whether it's a buy or not. Let me have a look. This is not financial advice. It's just a quick look. NU. Potentially undervalued, but that's not enough. Base case, best case, okay, that all looks good, but that's not enough to tell us. Okay. So let's scroll down. Let's have a look at its growth potential. Its growth potential, 10 bit up 11%. That was in June. September, which will be our earnings, if it beats and it's expected to beat, it's expected to carry on. That's nice. The operating income is good. The net income is good. The financing cash flow is good. Investing cash flow is good. Operating cash flow, most important, is very, very good. That's good. Okay, that's all looking good. 44 billion assets, 37 liabilities. How much is short-term debt? Long-term debt, 1 million. Short-term debt, 25 billion. It's got a lot of debt, 68 billion in debt. Short-term debt, that's 3/4 of its assets. Cash, 6 billion. It owes 25 billion out of 40 billion. So it's just over high. 68% is a debt position. That's quite high. Has 6 billion in cash. So it can pay off a third of its debts with rates coming down. A lot of debt, but a lot of growth. 73% gross margin, but operating margin 22%, net margin 15%, but rising and increasing. Okay. Profitability is a bit low. And solvency. Right, okay. Just quickly, and it's not financial advice, I wouldn't buy it. The reason why I wouldn't buy it is it's got a lot of debt, which can be a catalyst because obviously it's going to come down. Rates are going to come down again and going to continue coming down probably every other meeting for the next year, which would help it. But it's very expensive. It's overbought. And if you look at the expectations, worst case scenario, it could fall 46%. Average, it could fall 2%. It could rise 29%, which is great. But you can make that at the moment with the S&P or with the S&P just because of AI. So I don't know if it's worth overpaying for it. It's a risky stock to buy it at this valuation. It's an okay business, but it's expensive at this point. No dividend with it. Solvency 41% because of that debt. Yes, it will increase to probably 55. My experience would tell me that with rates coming down. Profitability, that's a bit low for this sector. Yes, things are all moving upwards. I would say the way I would look at this, Jerry and Elba, would be it's an interesting company. It's not going to go bust in the short to near term. It's got potential growth. Its expectations are looking good. However, it's got a lot of debt. Rates are going to come down slowly. I don't expect 0.5% today. I expect 0.25% now, 0.25% in December, and then every other meeting in next year. So it's not going to affect its debt position in the short to mid-term. I would say if you liked it and you really wanted it, there are probably better opportunities like the S&P, in my opinion, without any risk at all, really. I would, if you were going to buy it, I would say if you had an allocation of $1,000 and just whatever number it is, I would say put 40%. Normally I say 50. I would say put 40%. Say you got $1,000, put 400 in now. Keep the other 600. Keep your powder dry on the other 600, waiting for a drop. If you get a 5 or 10% drop. If you get a 5% drop, commission another couple $100. That takes you to 600. If you get a 10% drop, you could probably go near all in at that point. So I would stagger it. If you miss it and it carries on going, doesn't matter. You could just keep your money in Robinhood, say earning 5% at 4% at the moment for another few weeks to see how it goes. We are in the middle of a rally. The rally is going to peak in December, and then we'll get a bit of a drop in January, tax harvesting, and I think the stocks are going to go pretty much sideways for a while. This is why I'm expecting my Coca-Cola to come back up to meet the S&P. That's what I would do. I hope that helps. A little bit of a thought on that stock. Just a quick look at it. I hope that was of some help to you. Right. Let's get ready for the rate cut
a few years ago, and we're not going back to 4% anytime soon.
Should the providers be blamed for these high spreads, or are these high spreads a function of or let me put it this way, have the spreads gone up or not?
There's been a little bit of margin padding, especially on credit cards. You know, one factor is actually the CFPB's proposed late fee cap. And that's actually led some issuers, especially store cards and subprime cards, to pad that margin, basically compensating for a drop in one place and maybe make it up elsewhere. Also, we have to remember the Fed pushed rates higher by 5.25 points, and it's going to take a while to unwind that. I mean, we're talking the highest rates in decades for many of these products.
But in reality, if they had cut by 0.5 point 6 weeks ago, and we saw that 0.5 point play out across the curve, these rates would start to be significantly lower.
Just got a request from Rivian. Are you spamming it? Yeah, that's okay. I see Mike's doing a good job. If you want to be a member of the channel, obviously I can do an earnings for you and I can cover things for you. I can do an analysis for you, but it is reserved to members. You can see we're getting busy now, getting near a highlight moment. So we're getting busy on the channel, and I can't look at Rivian right now. We're just a few moments away. If you are a member, of course, I can make updates. I can make it a priority. Update on Trump stock. Again, I can't cover that right now. I've just done. If you do this, we've got a few seconds. We're just building up. If everyone could smash the like button, if we get 100 likes, YouTube will suggest this out and will rank for the stock. Sorry, rank for the FOMC report. More people will learn about what's going on. So please do tap the like button. There's 53 likes right now with 129 watching. If you could do that. While you're doing that, let me just show you what I mean for that person who wants to know about Trump. This is what you do. You go into YouTube. I've done lots of reviews on Trump for you. This is YouTube. Type Martyn. Whoops, a daisy. Good if I spell my name right. Martyn Lucas Investor. Right? And then you put DJT stock. That's the ticker, of course. You will see what I've done. I've done a Trump video there. Look. Pause. Be careful. DJT stock. There is a review on it for you. Would you? DJT warning. I think that's it. The Trump trade. Done that DJT. That was yesterday. I gave you some analysis yesterday. Trump trade. You'll find lots of things that I've done on Donald Trump's trade yesterday and a few days ago. So all you got to do is type that into YouTube, and you'll find it all. All right, we got 5 minutes to go. Okay, there you go. That's what you type in. Let's get into it. I've also done lots of reviews on Nvidia. Sorry, not Nvidia. Someone's asking Rivian. I've done reviews on Rivian as well. If you want to go and do the same thing, Martyn Lucas Investor, Rivian, you can see that as well. Right, okay, let's get ready. We've got 130 watching, 53 likes. We are 5 minutes away now from rate cuts. Let's have a look. From the rate decision. I should say that actually, shouldn't I? You ready? Okay, here we go. We want 100 likes. Are you ready? Here we go. Let's go. Then we get suggested on YouTube and we can put the word out about the FOMC report. 134 watching. 134 watching. The most we can get now is about 60, 70. We're on 53. 5, 4, 3, 2, 1. Let's refresh it. We're on 100 just before the report starts. They are 65 on the way up. If everyone could tap the like button, that'd be great. 125. That's about as much as we're going to get right now. So thank you all for doing it. That's everybody. Those that haven't done it aren't signing to Google, and they can't. There's people that just don't sign in. They can't chat. They can't engage. That's just the way it is. That's pretty much 100%. Thank you very much indeed, everybody. All right. Hopefully the rest of it will take care of itself. Here we go. Let's get ready to go. It's going up again. Now then, my strategy. I know my strategy. I know 5 steps ahead. Always. Don't go into anything and react. Be proactive. What do you do if it goes up? What do you do if it goes down? You should already know there's no emotion. 100%. I started with $5,000. I've now got 103,000 in my main account, 27 in here, 130,000. This is my realized profit. I've realized money now. I've got 205,000 on the way to $250,000 now invested with my margin and so on and so forth. You can see that live. There it is. You can see how much margin, what's going on, and all the rest of it. I am fully invested all the time. Always 55% margin. Always got slightly over, so I've got plenty of money to buy. I've got, as you can see, 6%. I always keep it on 50%. Okay, so this is what happens if it if it goes up like a rocket. What do I do? Nothing. Absolutely nothing. If Coca-Cola on my Roth IRA goes up 3 or 4%, what do I do? Sell it. Absolutely. Sell that. Tax-free. Take the profit. Buy the S&P when it dips throughout the news conference at the end. Okay. What if it goes down 10%? Because people take profits, which they can. A bit of a Trump trade. Pops up, take all the profit, back down again. If it goes down 10%, I shall buy another 10 to 20 shares of the S&P with my margin. That's what I should do. Why would I do that if it goes down? Well, because all the main companies have reported the earnings were fantastic. The economy is strong. Donald Trump is going to inherit a great economy. The stock market has rallied since we had COVID and the pause the year after. It's rallied ever since. It's been a bull market now for nearly 18 months. The economy is good. Rates are coming down. Businesses are growing. Businesses are beating. Donald Trump inherits a great economy. That's not an opinion. That's a fact. Of course, he will then say it's great and he's done brilliant. It's already happening. Rates have already coming down. And look at my 1 year. My 1 year on the S&P is 36%. 36% in 1 year on the S&P 500. So don't tell me we're not in a bull market and the economy's not strong. It absolutely is. So there could be a Trump trade here. Take profits. If there is, I shall buy a 10%. Would I buy a 3 or 4%? No. It's got to go down big if I'm going to buy another 10, maybe even 20 shares of the S&P. Right, so that's what we're doing. So we've got seconds to go. Are you ready? Has everyone tapped the like button?
As is so often the case, glad to have David Kelly.
We've got 139 watching. We've got 67 likes, 72 likes. Come on, guys. Let's get to it.
All of you, David Kelly,
let's get busy. We're going to make some money now.
The result will be, and what will the texture of the statement be?
We've got an earnings tonight as well. We're doing funware earnings.
I think they'll try and change the statement as little as possible.
Are you ready to rumble? Okay. Fed rate decision any second now. Stand by. 1 minute to go. Hopefully everybody's liked the video because we want to get recommended on YouTube for this. And stand by. Here we go. Seconds away.
6% following the election of the United States of America in the bond market. I think we should stress once again, Lisa. This is a very different bond market to the one on September 18th when the Federal Reserve reduced interest rates by 50 basis points. The 2-year had a 3 handle. The 10-year was trading in the 360s. We are 70
announcement
basis
is
points
just
higher
the first part of it. The main part is the meeting. That's where we get the volatility.
We are seeing just an incredible upside surprise to a whole host of economic features.
You will get the
here.
rate cuts in 20 seconds.
How they frame that
I say 0.25.
Time where they are talking about balanced risk
Stand
and
by.
in the labor market. Is that true?
The data surprise to the upside.
Yes.
It's not just the politics.
Correct.
The 50 basis point cuts, some people believe, encourage the move in long end rates as well. Do they understand their responsibility in some of the moves we've seen?
Which is the reason why some people think that you are going to get another dissent from this rate decision. Potentially it could be again 8-1.
10 seconds to go. Apparently this is an easy decision for the Federal Reserve. And the Federal Reserve decision we're looking for is an interest rate cut on the FOMC FOMC of about 25 basis points. With that decision, here's Mike McKee.
You got it, John. A quarter-point cut in the
there you go.
benchmark
Spot on.
interest rate. A few changes to the statement.
Market shouldn't move too much.
The target range now
it might celebrate a bit.
0.75%. There is no change to balance sheet policy. The decision this time unanimous as September.
Unanimous. That's good. Strong Fed, strong economy.
Inflation, the statement says,
that's getting behind Jerome Powell because Donald Trump wants to fire him. I don't know. He can't actually fire him, but there'd be no reason to fire him. He's done a good job. Brought the rates down exactly as expected.
Confidence that inflation is moving sustainably toward 2%. The economic assessment suggests a slightly weaker labor market, noting that since earlier
0.25 is what we want.
Labor market conditions
that will provide good growth.
And the unemployment rate
0.5 would have been overreaction.
But remains low.
Sorry, Mike,
Still,
but it is the right result.
September's view that risks to achieving its employment and inflation goals are roughly in balance. The rate cut today is in support of its goals instead of September's in light of the progress on inflation and the balance of risks. Policymakers note again they will consider additional adjustments to their benchmark rate, but offer no further guidance beyond that. There is no mention of politics in the statement.
No, there wouldn't be.
Chairman Powell.
This is very, very good.
It'll be up to you, sir.
Stand by for the next part, the most important part.
It's a bit early, but you're probably right. Steve, stick around. Let's turn to our panel for some more reaction. And, of course, to look ahead to the
most important part hasn't begun yet.
And, Jim, that's
now we get the horse trading, how we can trade it. It's good news. It's a good day.
I mean, ultimately, I think what the Fed is going to try to key off of is what's happening in the labor market. I think inflation they're comfortable with. Inflation has been coming down. It's starting to settle down. They're making progress.
Exactly. We don't want to overstimulate.
I think that's yesterday's news. Tomorrow's news is what happens to payrolls. Now, look. Ultimately, we've had some storms.
Everyone smash the like button. We're 19 away from 100 where YouTube will suggest it out, please. Thank you.
But I think their biggest concern is if there is a slowdown in the economy and if the unemployment rate starts to rise very, very quickly, then they will have wished that they've continued on with their pace to cut interest rates. And I think that's what they're going to do. 25 today, 25 in December, and I think they're on a mission to 4%, and then they're going to reevaluate.
Correct.
The statement admitted the reference to having gained
greater
confidence in inflation moving sustainably to the 2% target. David, what does that mean?
I don't think it means that much. They're always trying to use as few words as possible, so if they can get rid of a sentence, they're happy to do so.
Let's see if Robinhood have reduced their margin rates
while justifying a first move, but I don't really think it means very much. I feel pretty good about payrolls, though. I think that, after the election, just not seeing commercials will make people feel better. But I think you will see a bounce in small business confidence. There's a lot of uncertainty going into the election. I think people will probably be more positive about making business decisions. So I don't see any reason to expect a slowdown. And we might actually see slightly higher inflation in the months ahead. So I don't expect the Fed to accelerate the pace of rate cuts.
Stephanie, your thoughts?
Yeah, so our base case is that they're going to be doing that every other meeting cutting cycle from here. The one thing we didn't talk yet about is the ECI. The Employment Cost Index showed wage inflation just continuing to slow down. So this is largely explained by perhaps productivity picking up, which is a great backdrop for the Fed to be able to continue easing, even though the economy is holding up fairly well.
The rates haven't moved yet. Do expect the rates to move.
Of growth environment with productivity actually picking up. So despite the expectation that growth is going to remain fairly solid here, the Fed is still able to continue its path on easing.
Steve, we turn to you for some more color from the statement. Were there any dissenters?
No,
let me read your comments. We've now got the conference. When that starts in 25 minutes, that's when all the action will begin. So this is all good news today. Very, very good news indeed. So let's have a look here. Let's go. Mike didn't like it. Mike, it's the best result. It's exactly what we wanted for long-term growth. Expected, yeah, we are at 4.7 rate now. So we should get a rate cut from Robinhood. It normally comes in the next hour, and my rate will come down on my margin, which will be fantastic. It will save me about $2 a day, which will be nice. But that's no fun. 0.25. Why so little with negative job numbers, government jobs? Because if we reduce the rate faster, there's a chance that inflation could start to go up again. And we don't want to do that. Hell, I remember 18% interest and even higher. Exactly. This is very, very good rates if you look at history. Please reduce TV volume if you have a comment, Martin. Please reduce TV volume. The TV volume is too loud.
From those two factors, you still have a pretty weak employment report. So I think the Fed is saying risks are balanced, and that's part of this whole recalibration idea. And maybe one of the questions we might ask Fed Chair Powell.
That shouldn't be a problem. I'm just checking the audio. All my levels are correct.
From here, we'll just have to see.
Yeah. I don't see there should be a problem there. I'll keep my eye on that, but thanks for letting me know. 0.25 is the correct amount. Yes, it is. It certainly is. So stand by now for the conference. That's what's important. We'll be getting that shortly, and then that's when the fun begins. 0.25 was right for what we had. Exactly. Good God. Good gold almighty, said MSK. Sony, Lucid, and Airbnb. Lucid is run by a crook, Peter Rawlinson, who's paid himself all the money and virtually bankrupted the economy. Bankrupted his own stock. So yeah, it's good here, says Iberian Wolf. Yeah, it's good. It is good. If you are commenting at the same time as TV, it's a little chaotic. Oh, I see what you mean. That's understandable. It was a chaotic moment, though. I was covering both at the same time. I appreciate what you're saying there. Appreciate what you're saying. Thank you, William. I appreciate what you're saying. TV volume is fine. Yeah, I'm just listening to what everyone says. Everyone experiences it differently, and I want to take everyone's thoughts into account. Now then, I have a request, and I'm trying to decide whether or not I can do it. So, Vaz, is Vaz in the show today? We've got 20 minutes before the report starts. No, he's not there. Okay. ACHR. I'm just doing some checks here. ACHR. I've had a request. I just don't know if I can do it just yet. Hang on. I've been asked if I can do a second earnings tonight. So I'm going to see if I can do something for you. We've got a few minutes to go. This is great. Portfolio is very strong. It's all the S&P. Coca-Cola is doing nothing yet. 130,000, just 131 nearly. Just need Coca-Cola to do well, and I'll be laughing. ACHR. I've had a request. I'm just checking it. No, Archer. We haven't done Archer. We haven't done Archer before, so I don't know is the answer to that. Right. Switch account. Can I do this? Donald Trump stock. Wouldn't touch it now at all. There's no fundamental value. Right. I want to know more cowbell. I love that. I love that cowbell thing. Absolutely love that. Have we got... this is what we're doing, right? We've got the FOMC report in 20 minutes. We're going to cover that live in 20 minutes. That's when we get all the real movement of the stock. But so far, this is really, really good. So we're very, very happy. We're going to run. That's going to close. And then we've got an earnings tonight. We've got a Funware earnings on this channel. And I've been asked if I could do ACHR. Do we have anybody that's interested in Archer Aviation? There's 149 of you watching. Could you put in the chat if you'd be interested in seeing Archer Aviation earnings tonight? On this channel, I'm doing Funware. I've been asked to do it, but I haven't confirmed I would because it's last minute, and I'm already doing one. And as you know, I've been on a month break. It takes a while to get everything going again, especially at double speed, doing two earnings at the same time. So if you are interested in ACHR, just put in the chat you would like it, And what I will do, if we get a decent bit of interest, I will record a promo now just before the FOMC starts. When we end this, I'll put it out, and then it'll be on my extra channel tonight at the same time as I'm doing Funware earnings on this channel. So, for those of you... What's that there? Okay, just checking something. This is the extra channel. It runs behind me. See, this is me from the back. This is what's called the extra channel, and this is where we'll run the Archer Aviation earnings tonight. As in the front of me, which is here, I am doing Funware. And I've been asked to do it, and if I have a member ask me to do it, and give me a minimum of $5 super chat, I do it. The reason why I'm asking is because it's last minute, and I wanted to see if anyone was interested before I worked overtime crazy to get it all done in time. So how many did I have? Fred Fish likes it. Eric likes it. Yes, I have some Archer and Tony De La Cruz. James always supports the extra channel, of course, one of our star moderators for a year. He's got a 1-year badge. Prasad, he likes the idea. Okay. You're going to make Vaz very, very happy then. So, stand by. The FOMC is coming up. So what I'm going to do is make a promotion video, because if I don't make the promotion video, nobody will know it's even on. All right? So here we go. Archer Aviation. Just going to make this very, very quickly. So stand by. Don't go anywhere. We're going to be straight back with the FOMC, ACHR. I'm just doing this now for you guys. I hope you'll all tune in after you've said that. So, right. Okay, here we go. The time is double earnings tonight. I can't believe it. Didn't expect to be doing that on day 4 of being back. But there we go. 41, ACHR. Okay. Just very, very quickly then, folks. Okay. Right. Okay, here we go. Just very quickly, and we'll be right back to the FOMC report, so stand by. Here we go. This is for the request you are doing right now. Jerry and Elba, look at that. Thank you so much for that. That's very kind. Now I'm extra loved. I've got to do it, right? Okay, here we go. So, ACHR, Archer Aviation, earnings tonight. Just decided just a few hours before, a couple of hours before, in fact, one of my members has done a super chat. If you are a member and you do a minimum $5 super chat, we'll cover the earnings for you. So we are covering Archer Aviation. We're going right. Okay, here we go. So, hang on a minute. Let me just mute that. There we go. Archer Aviation. We're going into the air. Just decide tonight with a bit of, do you like this? A little bit of flying around. I quite like this. It's quite cool, isn't it? Archer Aviation. This isn't exactly Archer Aviation, so but you get the idea, right? Anyway, we are going to do Archer Aviation for you tonight live. So please do join us. Are we going to make some money on this stock? Now, it's not only going to cover the official earnings, way more than that. We're going to do the earnings, plus we're going to provide you a live phone-in. You can be live on the show. You can also, I will also break down the numbers, the figures, and this video is going to go out shortly before the earnings and probably rank number 1 or 2 on YouTube. Most of my stocks do rank number 1 in the world for the stocks, so we're very excited to see this one do well tonight. Archer Aviation, we're going to cover the earnings tonight, so join us. It'll be on the extra channel, not this channel. Where you're watching me right now, it'll be on my other channel. I'll put the link below. It'll be on Martyn Lucas Investor Extra. So look out for it. This video will probably be on both channels, so you can find it. But either way, it's on the extra channel. The link is above my head, down below in the description. Right here, I'll put Archer Aviation, the earnings. And down here, I shall put something else that you would find useful. I'll decide what that is when I've made it. Can't think what it is right now. But there you go. All right, fantastic. That's it from me. Vaz has just come in as at the end of the video. I'd rather watch Martyn Martyn's back listening to the earnings than watching another channel. Look at that. Don't you just love that? I'd rather watch Martyn's back listening to the earnings than watching other channels full of trolls and bloody idiots as I did with Joby last night. Thank you, Martyn, Jerry and Elba. I love it. People would rather pay to watch the back of my head than watch it on a channel full of trolls and bots and bloody idiots. I love it. Is that a compliment? I don't know. I think it is. I think it is. Anyway, here is the event, and here is something else. Until next time, as always, don't forget, this is the best channel in the world. Okay, there you go. Right, that'll be put out straight after this event, Archer Aviation. Let me come back to my main positions. There we go. So we're doing double earnings again tonight. Alfred just subscribed to Extra. My God, he's already on it. I'm not only going to watch it, I'm already subscribed to it. Boom. Boom. I'm in. Boom. I'm in, he says. I'm loving it. So Funware, Archer Aviation. Okay. We've got the FOMC report just some moments away. Thank you very much indeed for the super chats on the screen. Let me put it on the screen for you. There you go. Super chat from Jerry and Elba. I love it. I love it. Was that, where did that come from a moment ago? Yeah, I'd rather watch the back of Martyn's head. That's brilliant. See, you would have watched Joby with me last night, but you watched it on a rubbish channel with bloody idiots. Yeah, I love it. Oh, these trolls, bots, and bloody idiots. Oh, I love it. I love it. Trolls are fun. They are. Remember this morning, the guy thought I was robbing people by charging $5 to do the earnings, the video, the promotion, the work, everything. Oh, you're all about the money, you are. We got rid of him. No, we didn't get rid of him. We let him do it, but it was funny when he buggered off in the end. Anyway, right, the FOMC report is just a few moments away. So, for those of you that are going, what's all this about Extra Channel? The Extra Channel is this one. I'm going to give you the link right now. It's on the homepage of this channel, but there is Extra. So you've got just a couple of moments ago, please subscribe to Extra. That's where we go behind the scenes. That is live 12 hours a day. It's, I will tell you now, before you subscribe, wait, before you subscribe, it's a catch. Before you subscribe, there's a catch. It's live 12 hours a day. It provides a space for real investors. Real investors, day traders, long-term investors, scalp traders, to share knowledge, information, talk to each other, and also talk to me and say, Martyn, there's some breaking news. Can you come back live and do this or that and the other? So it's viewable by everyone, including the idiots. But if you want to be in the chat, and we don't apologize for this, it's 99 cents to become a member. As cheap as it possibly could be. And the reason we do that is bots and trolls. First of all, bots can't pay to be a member. And trolls, they just talk rubbish because they haven't got any money and they can't afford 99 cents. I have never had a troll, someone who talks rubbish, trying to promote rubbish, afford and ever do it. They've never done it. Paid 99 cents. So it just shows you the level. So there is the Extra Channel. If you want to subscribe to it, that's the deal. You can watch it, but you can't chat unless you are a member, and it's 99 cents if you want to do it. This is what it looks like. This is the Extra Channel. It's running live right now behind the scenes. And tonight, when I'm presenting Funware in front of you, I'll be presenting Archer behind me. Does that make sense? You got to tune in to see it. You've never seen a thing like it. Best channel in the world. I keep telling you. Keep telling people that. No one believes me. But anyway, there you go. Stand by it. Never seen anybody else do 2 shows at the same time. Anyway. James is already in there, welcoming everybody in. I'm loving it. In the Extra Channel. All right. How many people are watching? There's 3 right now, isn't there? Hardcore. 15 likes, though. 15 likes. The hardcore team. Right, we got a few minutes to go. So that's good. Archer Aviation. So now I've done that. We've got 9 minutes. I wonder if I've got time to set up ACHR. ACHR. Have I done it before? Before it starts. Right. I'm just going to see if I've got some of this already so I can get a jump on it. ACHR. No. Archer. Aviation. No. Okay. I've got some work to do then. I won't do it now, but I'm just seeing what I need to do. Thumbnail template. Sort by name. Scroll to the top, Archer Aviation. Let's have a look. There it is. Ah, good. Can I do it? How long have I got? 9 minutes. Okay, I'm going to open up Photoshop. You won't see this. This is over the top of you, but I just know you're still there. All right? It's kind of weird. Right, I can't see you now, but I know you're there. Does that make sense? It sort of does, doesn't it? Does it make sense? Earnings. I'm creating a thumbnail for Archer Aviation. You're thinking, I don't get it. I can't see anything. You won't see it. You could probably tell by looking in my eyes, look, I'm not really focused on what you think I'm focused on. Does that make sense? It does, doesn't it? Anyway, I'm creating the thumbnail for Archer Aviation because some clown decided to tell me 5 minutes before the show, can I have it? And you all said, go on, do it for him. Be nice. Be nice for a change. Archer Aviation. Let's move that up there. Done. You're going to be very proud of me. I've done a good thumbnail. Vaz, $10, mate. I've got to do it right, ain't I? Okay, here we go. Save as. Archer. Earnings. Okay. Video, thumbnail template. Yeah. Save. Layer. Flatten image. Is it weird watching me do this? You're thinking, I don't know what he's doing. It's rubbish. I'm not watching this anymore. You got 8 minutes to go. Don't worry about it. It's fine. Taking care of the members, which could be you, right? Remember that. It could be you. Thinking, well, yeah, I could be getting this service. ACHR earnings. Maybe I'll become a member. Then I'll get treated like this. Yeah, see? Think about it. 9. Okay. Save. Quit Photoshop. I've done it. You can't believe it, can you? Right, now I'm back looking at the camera. Now, see the difference? Now you can see I'm looking at you. All right? Now you can see what's going on. Okay. Have we got 100 likes yet? 81 likes. Let me check. We got, tap the like button. We've got 7 minutes to go before the press conference. That's what it's all about. 97 likes. 97 likes. I'm loving it. 97 likes. 97 likes. Okay. Create. It's 3:30. Go live. Go live. Schedule a stream. Reuse settings. Yeah. Okay. Martyn Lucas Investor. Okay, here we go. ACHR stock. Archer. Oh, hang on. It's not on this channel, is it? Bloody idiot. That ain't going to work. Switch account. There was clearly a mistake there. That was Vaz's fault. Vaz, that was nearly your fault. Right, is the market holding up? Yep, we're good. We got 5 minutes to go. I'm going to get it done. Don't worry. Going to get it done. And you're all going to watch me. You're all going to watch it, aren't you? Yes. We will watch it. Okay, here we go. Here we go. Okay. Here we go. ACHR stock. I nearly put it on the wrong channel, but I'm doing it right now. Archer Aviation earnings. Right, there we go. Archer Aviation earnings. Martyn Lucas Investor. There it is. Copy that there. I need Archer Aviation information. We've got time. Yeah, 4 minutes. Don't worry. I got this. I got this. I'm a professional. Archer Aviation. Yes, 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 yes. Seeking alpha. Cut. I got this. Okay, scroll down, scroll down, scroll down. Thumbnail, change, yeah. Archer Aviation earnings, created that. Thumbnail, logo, done. Live show, playlist, live show, earnings. I don't think I have an ACH. No, I don't. New play, how long have I got? 3 minutes. Eee, now we're getting tight. New playlist. Now we're getting very tight. Show more. I've got to be really quick now. I'm copying and pasting, creating a playlist at the same time. If I don't get it right, I'll stop. Don't worry, you won't miss it. Don't worry, you won't miss it. ACHR stock. And before you start thinking I'm going to complain, you can't complain. Who're going to complain to? Me? The thing is, if you are a member, you can have this service as well. Arch Public, date added newest. Yep, create the thumbnail. Right, done. Scroll down, show more. No. How long have I got now? 2 minutes. Bloody hell. ACHR stock. Archer Aviation earnings. Okay, done. Get rid of that. Get rid of that. Okay. I'm going to be on time. I'm just going to get it. Live member. Yeah, only members can chat. That's the way we do this channel, isn't it? Public. November the 7th. From what time did I say? 3:30? 3:30. How long have I got? 1.5 minutes. 3:30 done. Okay, that's done. The stocks are going up. That's looking good. That's Coca-Cola's holding up. Right, it's done. Back to there. Switch account. Martyn Lucas Investor. Yeah. Right. Fed report. Yep.
In particular,
we're good. News.
About,
good.
A December pause.
Extra channel. So here's the event. Go and check it out, folks. It should be here. If I refresh this, it should appear. And boom. Are you liking the thumbnail? It's good, right? It's good. It's good. We are good to go. And now we're going to get the... that's done. This is ready to go.
What that's going to be about.
Jerome Powell is about to take the stage, and we are rocking and rolling. So let's bring you back to here. Thank you ever so much, everybody.
Stimulus coming down the pike a year from now. What do you model?
This has been a fantastic conversation, gents. Bob Michael and a former Fed Vice Chair, Richard Clarida. To the two of you, just absolutely brilliant. Just some takeaways from the last 30 minutes if you're just joining us. Richard Clarida talking about maybe finding some space to generate some optionality going into 2025.
Say Vaz. What did I say? What did I say earlier?
The decision gets harder once you get to December, and that this one was an easy one and maybe December is a tricky one.
My big takeaway is that the Fed removed the reference in their statement to gaining confidence on inflation at the same time that our panelists, our esteemed panelists, are talking about opening the door in December.
I will do the thumbnail to our
potentially going forward and maybe not cutting next year.
Are you ready for a 45-minute
I love it.
clinic on
Next
how
time
to
I
answer
ask, I'll
questions?
do the thumbnail.
Actually, I'm so excited.
Right, you ready?
No,
It's all done now.
not.
At the end of this show, I'll put out the video,
I think it's going to be one of
and
those news conferences,
we'll be
and
good.
Mr. Clarida knows this well, where you have a sheet of paper in front of you, you've got your notes written down, and every time you get that question, 20 different versions of it,
97 likes.
comes up and you
We need 100.
verbatim, and hope they get
105. We did
My
it.
favorite is when they
Thank
have
you, guys.
multiple sheets, when Jay Powell has multiple sheets.
Showtime.
Question, you see him going through the
Fed Chair
papers.
Powell. Here we go.
There's the answer.
Spot on.
Those questions, answer sheets for the chairman?
I participated in discussions of press conference briefings, yes.
25 basis point reduction over at the Federal Reserve. Here's the chairman, Jay Powell.
My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The economy is strong overall and has made significant progress toward our goals over the past 2 years. The labor market has cooled from its formerly overheated state and remains solid. Inflation has eased substantially from a peak of 7% to 2.1% as of September. We are committed to maintaining our economy's strength by supporting maximum employment and returning inflation to our 2% goal. Today, the FOMC decided to take another step in reducing the degree of policy restraint by lowering our policy interest rate by a 1/4 percentage point. We continue to be confident that with an appropriate recalibration of our policy stance, strength in the economy and the labor market can be maintained, with inflation moving sustainably down to 2%. We also decided to continue to reduce our securities holdings. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. GDP rose at an annual rate of 2.8% in the third quarter, about the same pace as in the second quarter. Growth of consumer spending has remained resilient, and investment in equipment and intangibles has strengthened. In contrast, activity in the housing sector has been weak. Overall, improving supply conditions have supported the strong performance of the U.S. economy over the past year. In the labor market, conditions remain solid. Payroll job gains have slowed from earlier in the year, averaging 104,000 per month over the past 3 months. This figure would have been somewhat higher were it not for the effects of labor strikes and hurricanes on employment in October. Regarding the hurricanes, let me extend our sympathies to all the families, businesses, and communities who have been harmed by these devastating storms. The unemployment rate is notably higher than it was a year ago, but it has edged down over the past 3 months and remains low at 4.1% in October. Nominal wage growth has eased over the past year, and the jobs-to-workers gap has narrowed. Overall, a broad set of indicators suggest that conditions in the labor market are now less tight than just before the pandemic in 2019. The labor market is not a source of significant inflationary pressures. Inflation has eased significantly over the past 2 years. Total PCE prices rose 2.1% over the 12 months ending in September, excluding the volatile food and energy categories. Core PCE prices rose 2.7%. Overall, inflation has moved much closer to our 2% longer run goal, but core inflation remains somewhat elevated. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. We see the risks to achieving our employment and inflation goals as being roughly in balance, and we're attentive to the risks to both sides of our mandate. At today's meeting, the committee decided to lower the target range for the federal funds rate by a 1/4 percentage point to 4.5% to 4.75%. This further recalibration of our policy stance will help maintain the strength of the economy and the labor market and will continue to enable further progress on inflation as we move toward a more neutral stance over time. We know that reducing policy restraint too quickly could hinder progress on inflation. At the same time, reducing policy restraint too slowly could unduly weaken economic activity and employment. In considering additional adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. We are not on any preset course. We will continue to make our decisions meeting by meeting. As the economy evolves, monetary policy will adjust in order to best promote our maximum employment and price stability goals. If the economy remains strong and inflation is not sustainably moving toward 2%, we can dial back policy restraint more slowly. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we can move more quickly. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to our discussion.
Thank you. Given the expectation that the election outcome will produce policies that would meaningfully impact the U.S. economy next year, how is the committee taking these proposals into account for upcoming decisions, including potentially the next one in December? And can you give us any more sense of how proactive or reactive the Fed is prepared to be to changes in economic policies with the next administration?
Sure. So let me say that in the near term, the election will have no effects on our policy decisions. As you know, many things affect the economy, and anyone who writes down forecasts in their job will tell you that the economy is quite difficult to forecast looking out past the very near term. Here, we don't know what the timing and substance of any policy changes will be. We therefore don't know what the effects on the economy would be, specifically whether and to what extent those policies would matter for the achievement of our goal variables, maximum employment and price stability. We don't guess, we don't speculate, and we don't assume. Now, just in principle, it's possible that any administration's policies or policies put in place by Congress could have economic effects that over time that would matter for our pursuit of our dual mandate goals. So we, along with countless other factors, forecasts of those economic effects would be included in our models of the economy and would be taken into account through that channel.
Nick.
Chair Powell, Nick Timrose from the Wall Street Journal. Roughly 1 year ago, when the 10-year Treasury was flirting with 5% and 30-year mortgage rates were near 8%, you noted how higher borrowing costs, if they were sustained, could weigh on economic activity. Given that you've said you believe policy is restrictive and the Fed is now dialing back that restriction, are the growth risks presented by higher U.S. Treasury yields today any different from those you identified 1 year ago when inflation was still meaningfully above your target?
So I would just say this: we've watched the run-up in bond rates, and it's nowhere near where it was, of course, a year ago. I guess the long run rates are well below that level. So we're watching that. Things have been moving around, and we'll see where they settle. I think it's too early to really say where they settle. Ultimately, I'm sure we've all read these decompositions of what, and I certainly have, but it's not really our job to provide our specific decomposition. I will say, though, that it appears that the moves are not principally about higher inflation expectations. They're really about a sense of more likelihood of stronger growth and perhaps less in the way of downside risks. So that's what they're about. We do take financial conditions into account if they're persistent and if they're material. then we'll certainly take them into account in our policy. But I would say we're not at that stage right now. It's just something that we're watching. And again, these things don't really have mainly to do with Fed policy, but to do with other factors in the economy.
If I could follow up, is the September SEP, are those rate projections still valid? Do they still seem relevant given where we are now?
You know, you get halfway through the cycle between the last set and the next set. I wouldn't want to comment one way or the other. You know, let's talk about the data we've gotten since the last meeting. So in the main, the economic activity data have been stronger than expected. The NIPA revision was stronger. Certainly the September employment report was stronger. The October report, not stronger. Retail sales stronger. So overall, though, I think you take away a sense of some of the downside risks to economic activity having been diminished with the NIPA revisions in particular. And so overall, feeling good about economic activity. So I think we would factor that in. At the same time, we got one inflation report, which it wasn't terrible, but it was a little higher than expected. So I think really the question is December, and you know, by December we'll have more data. I guess one more employment report, two more inflation reports, and lots of other data, and you know, we'll make a decision as we get to December.
Gina Smilik from the New York Times. Thanks for taking our questions, Chair Powell. When it comes to December, what will you be looking at specifically as you try to make that decision? And then as of the Fed's economic projections in September, you had written down 4 quarter-point interest rate cuts in 2025. Do you still think that those are likely? Is that sort of the baseline outlook at this point, or has that shifted? And if it shifted at all, can you give a little bit of detail as to why?
You know, we don't fill out an SEP, and I can't characterize one that wasn't filled out today. So I can't really speak for kind of exactly where the committee is. I will just say for December, we're going to be, again, at every meeting, we're going to be looking at the incoming data and how that affects the outlook. As you know, we're in the process of recalibrating from a fairly restrictive level at 5.33%. After today's move, we're down 75 basis points. And we're asking ourselves, is that where we need to be? You know that we're trying to steer between the risk of moving too quickly and perhaps undermining our progress on inflation, or moving too slowly and allowing the labor market to weaken too much. We're trying to be on a middle path where we can maintain the strength in the labor market while also enabling further progress on inflation. We think that's where we are, but that's the question we're going to be asking in September and in other meetings. And again, I can't really update you on the committee's thinking because we don't fill out an SEP at this meeting. Yeah,
totally appreciate that. I guess when it comes to your own thinking, do you think that a full percentage point of rate cuts in 2025 is a reasonable outlook?
Again, we're going to wait and see how things come in December. I mean, it's just. I would put it this way: we're on a path to a more neutral stance, and that's very much what we're on. That has not changed at all since September, you know, we're just going to have to see where the data lead us. We have, you know, a whole 6 weeks of data to look at to make that decision in December. Obviously, I'm not ruling it out or in, but you know, I would say, you know, I would say that, you know, again, we didn't update the SEP, so I'm not going to characterize, you know, where the committee would be.
Howard. Thanks, Howard Schneider with Reuters. I wondered if you could please elaborate and explain a little bit the 2 changes in the language of the statement here. In the first paragraph, when you say inflation has made progress, dropping the word further progress, and in the second paragraph, dropping the sentence that the committee had gained greater confidence that inflation was progressing towards its 2% goal. Is there any policy substance behind either of those changes in language? Is it meant to open the door to a December pause? Is it meant to communicate anything about the stickiness of core inflation the last 3 months?
Not really, no. So let me tell you what we were thinking. So the test of gaining further confidence was our test for the first rate cut, right? And so we met that test in September, and therefore we take that test out. If you leave it in, then it's new forward guidance. It's brand new forward guidance. What do you mean by it? Are you requiring yet further? We have to say yes or no at every meeting whether we've made further progress. The point is we have gained confidence that we're on a sustainable path down to 2%. So that I would tell you is what that's really all about. It's not meant to send a signal. Neither of those is meant to send a further signal. And saying further progress, it becomes a test. We don't want to be. We don't think it's a good time to be doing a lot of forward guidance. There's a fair amount of uncertainty in what I've said. The path that we're on, we do know where the destination is, but we don't know the right pace, and we don't know exactly where the destination is. So the point is to find the right pace and the right destination as we go. And I think there's a fair amount of uncertainty about that. And you don't want to tie yourself up with guidance. You want to be able to make sensible decisions as you go.
Steve Leisman, CNBC. Mr. Chairman, you talked about higher rates, perhaps from an expectation of higher growth. You didn't talk about it in terms of expectations of higher deficits. Is that something you think might be behind the recent rise in interest rates, and are rising deficits a concern to you?
So we don't comment on fiscal policy, and again, I don't have a lot more to say on what's driving bond yields. In terms of policy changes, though, let me give you a sense of how this works in the ordinary case. Let's say Congress is considering a rewrite of the tax laws. It doesn't matter what's in the content. So we would follow that. At a certain point, we'd think we see the outlines, so we'd start to model it. And then we'd wait, and at a certain point, the staff would brief the FOMC and say, these are the likely effects. There's lots and lots of literature on the effects of tax policy changes on various parts of the economy. So we'd try to get smart on that, and then the law actually passes. And you'd start to put it. You'd probably run an alternative simulation before that happens, just to keep people trying to understand it. Then when it actually passes, it goes into the model, along with a million other things. So, we have a very large economy. Many things are affecting it at any given time. And a law change of some kind would go in there, but it would go in. But it would, it's a process that takes some time. Clearly, the legislative process takes a lot of time. And of course, the real question is not the effect of that law. It's all of the policy changes that are happening. What's the net effect, and the overall effect on the economy at any given time? So I think that's a process that takes a lot of time, and that we go through all the time with every administration. Constantly, and this will be no different. But right now there's nothing to model right now. It's such an early stage. We don't know what the policies are, and once we know what they are, we won't have a sense of when they'll be implemented or all those sorts of things. So I think I would just say we're not doing that now, and all that will take time, and it will be very much regular order when we do that.
If I could just follow up on Nick's question. Are the current rates something you feel like you need to lean against, in that they go against the direction of policy by adding restriction to the economy, or do you just take them as a given and perhaps a signal that you should do less?
I just think the first question is, how long will they be sustained? If you remember the 5% 10-year, people were drawing massively important conclusions, only to find, 3 weeks later, the 10-year was 50 basis points lower. So, it's material changes in financial conditions that last, that are persistent, that really matter. And we don't know that about these. What we've seen so far, we're watching it, we're reading, we're doing the decompositions and reading others, but right now it's not a major factor in how we're thinking about things.
Chris.
Thank you, Chris Rugaber at Associated Press. You mentioned the positive economic data that we've seen since the September meeting, including the revisions to things like savings, higher GDP growth. We saw a stock market jump yesterday. That's renewed some of the questions about why do many cuts at all in this with this backdrop.
So you're right. As I mentioned, and as you mentioned, the latest economic data have been strong, and that's, of course, a great thing and highly welcome. But, of course, our mandate is maximum employment and price stability. And we think that even with today's cut, policy is still restrictive. We understand that it's not possible to say precisely how restrictive, but we feel that it is still restrictive. And if you look at our goal variables, the labor market has cooled a great deal from its overheated state of 2 years ago and is now essentially in balance. It is continuing to cool, albeit at a modest rate. And we don't need further cooling, we don't think, to achieve our inflation mandate. So that's the labor market. Inflation has moved down a great deal from its highs of 2 years ago, and we judged, as I mentioned, that it's on a sustainable path back to 2%. So the job's not done on inflation. But if you look at those two things, we judged in September that it was appropriate to begin to recalibrate our policy stance to reflect this progress, and today's decision is really another step in that process. Overall, as I mentioned, we believe that with an appropriate recalibration of our policy stance, we can maintain strength in the labor market even as our policy stance enables further progress toward our inflation goal.
Great. And just to follow up, what might cause you to pause rate cuts in December? What kind of economic data would lead you to that path? Thank you.
So we haven't made any decision like that at all. But we're in the process, as I mentioned, of moving policy down, our stance down over time to more neutral level. And as a general matter, as we move ahead, we are prepared to adjust our assessments of the appropriate pace and destination as the outlook evolves. So, for example, if we were to see the labor market deteriorating, we'd be prepared to move more quickly. Alternatively, as we approach levels that are plausibly neutral, or close to neutral, it may turn out to be appropriate to slow the pace at which we're dialing back restriction. Again, haven't made any decisions about that, but that's certainly a possibility. If you can think of it as similar to what we do with asset purchase, with asset runoff, with QT. So we reach a point where we slow the pace, much like an airplane reaching the airport slows down. And so we're thinking about it that way, but it's something that we're just beginning to think about.
Edward.
Thanks, Chair Powell. So with the noise in the jobs reports that we've seen, and you look at the Fed's favorite inflation, PCE inflation, overall it's 2.1%, very close to the Fed's target, but core inflation is 2.7%, and it's been that way since July. So why doesn't this data give fuel to a rate pause for this meeting?
Well, so I think if you look at the 3 and 6 month, you're quoting the 12-month. So we look at all of them, right? But if you look at 3 and 6 month core PCE, you'll see they're around 2.3%. So we look at all of them, and we also look at 12 as well. But what it's telling us is that we really have made significant progress, and we expect there to be bumps. For example, the last 3 months of last year, the core PCE readings were very, very low, probably unsustainably low. So that's why forecasts generally see a couple of upticks toward the end of the year. On the other hand, the January reading certainly looks like an example of residual seasonality, so that we saw last year. So when that falls out of the 12-month calculation in February, we should see a thing down. So it'll literally be a bump up and then down. We understand that. Overall, you see the progress on inflation, and you also look at the economy and you say, what is the inflation story now? Where's it coming from? So I point to a couple of things. One is the non-housing services and goods, which together make up 80% of the core PCE index, are back to the levels they were at the last time we had sustained 2% inflation, which happens to be in the early 2000s for a period of 5, 6, 7 years. So they're back to that level. What's not is housing services. So let's talk about housing services. Housing services is higher. What's going on there is, market rents, newly signed leases are experiencing very low inflation. And what's happening is older, leases that are turning over are taking several years to catch up to where market rent leases are. So that's just a catch-up problem. It's not really reflecting current inflationary pressures. It's reflecting past inflationary pressures. So that's one thing. The other thing is, I'd say look at the labor market, not a source of inflationary pressures. Where's it coming from? It's not a very tight economy. What is the story about inflation? You see that catch-up inflation also in insurance and several other areas. So you're seeing We're not declaring victory, obviously, but we feel like the story is very consistent with inflation continuing to come down on a bumpy path over the next couple of years and settling around 2%. That story is intact, and it won't be one or two really good data months or bad data months aren't going to really change the pattern at this point now that we're this far into the process.
So you're quickly trying to get to that neutral rate that you see, or do you foresee that you have some time to get there?
Nothing in the economic data suggests that the committee has any need to be in a hurry to get there. We are seeing strong economic activity. We are seeing ongoing strength in the labor market. We're watching that carefully, but we do see maintaining strength there. And so we think that the right way to find neutral, if you will, is carefully, patiently. Again, that's not meant to have a specific meaning, other than to the extent the economy remains strong, we have the ability to take advantage of that as we try to navigate that middle path between the two risks.
Craig.
Hi, Chair Powell. Craig Torres from Bloomberg. 2 questions today. Did you learn anything about what Americans think about the economy from the election results? First question. Second question. I want to talk about some labor market indicators, and I do so with great respect for your attentiveness to the maximum employment side of the mandate, Chair Powell. So the unemployment rate has been at 4% or higher for 6 months. One of the broadest measures of unemployment is up about 0.5 point from a year ago. Compensation gains are sliding back. The quits rate, a signal of labor market dynamism, has been heading down to that bad neighborhood of the 20 teens. So you have put a marker at Jackson Hole saying any further cooling is unwelcome. It is cooling generally a little bit further. So at what point do we reach what you would describe as a shortfall from maximum employment? Thank you.
Sure. So on your first question, I'm not going to talk about anything that relates directly or indirectly to the election. On the second one, this is the great question, and it's the one we think about all the time. So I'll just say a couple things. There's nothing really surprising here. What we know is that the unemployment rate is low. We also know that it's moved up significantly from a year or so ago. So we've seen a big change upward in unemployment. Sometimes that has meant bad things. So far, it doesn't appear to be. It appears that I wouldn't say that the labor market has fully stabilized, because I do think it's continuing to very gradually cool. But it seems to be in a good place, and our policy, of course, is designed to keep it in that good place, to maintain the strength in the labor market while also enabling further progress on inflation. You mentioned a bunch of indicators, and you're right. The openings to unemployment rate is back to a normal level. I would characterize it more broadly as normalizing. You mentioned wages. Wages are still running just a bit above where they would need to be consistent with 2% inflation, unless productivity is going to remain at this high level. If we see productivity, more sustainably at these high levels, then that would sustain higher wage gains. So I would say, in fact, you can say it the other way, that wage increases are now consistent with 2% inflation given current productivity readings. But of course, the lore on productivity readings is whenever you see high readings, you should assume they're going to revert pretty quickly to the longer-term trend. That has always been the case for 50 years. But it may be that we're now 5 years. If you look at the NIPA revisions that came out a month ago, we're 5 years into a nice set of productivity readings, which are sustained and very healthy. But overall, it's a good labor market. We could talk about 20 different data series. We'll be looking at all of them, of course. We don't want the labor market to soften much from here. We don't think we need that to happen to get inflation back to 2%.
Victoria.
Hi, Victoria Guido with Politico. Some of the president-elect's advisors have suggested that you should resign. If he asked you to leave, would you go?
No.
Can you follow up on, do you think that legally you're not required to leave?
No.
Mike?
Michael McKee from Bloomberg Radio and Television. You talk a lot about what the data are telling you and how you are dependent on the data, but in terms of forward-looking assessments of the economy, what are you hearing from CEOs or other officials around the country? What did you hear today from the regional bank presidents about what companies and consumers think about where the economy is going from here rather than looking backwards? And does that match up with what your forecasts have been and what you think the appropriate policy path should be?
So it's hard to characterize a really interesting set of discussions we had, and of course you'll see them in the minutes in 3 weeks. But I would say this: I think the comments from our Reserve Bank colleagues and from the CEOs that they talk to are pretty constructive on the economy right now. Pretty constructive, feeling that the labor market is back to normal, to the point where it's no longer that much a discussion topic in their worlds, whereas 2 years ago it was all they were talking about. So they feel like the labor market's in balance. People feel good about where the economy is. Demand is obviously pretty strong. And you're seeing 2.8% growth in the third quarter estimated. Maybe the year's 2.5%. This is a strong economy. It's actually remarkable how well the U.S. economy has been performing with strong growth, a strong labor market, inflation coming down. We're really performing better than any of our global peers, and I think that is reflected in what you hear from. What I hear people hear from CEOs. I don't get to talk to a lot of CEOs in my job, but I hear what others summarize from those. And of course, I hear the Reserve Bank presidents do a lot of that. And it's pretty constructive overall. Now, that's not to say there are areas of caution and things like that, but ultimately, overall, pretty positive.
Well, to follow up the areas of caution, if there were black clouds on the horizon that you identified as something you're watching, what would they be?
I think it's things like clearly geopolitical risks around the world are elevated, and just as clearly they've had relatively little effect on the U.S. economy. Now, that can change through the price of oil or otherwise, but people talk about those as something that's on the horizon all the time. But ultimately, if you look at the U.S. economy, its performance has been very good, and that's what we hear from business people, and expectation that will continue. If anything, people feel next year, I've heard this from several people, that next year could even be stronger than this year.
Andrew.
Hi, it's Andrew Ackerman with the Washington Post. I just wanted to follow up on the discussion earlier on fiscal policy. Your predecessors, Greenspan and Volcker, spoke up loudly when they thought large budget deficits endangered economic or financial stability. Will you do that too? And right now we're in a period of full employment. We have large budget deficits and debt at historic highs that are rising. Is that something you'd speak out against?
So, I have said many times, no more, no less than what the predecessors you mentioned have said. And what that is that the U.S. federal government's fiscal policy is on an unsustainable path. The level of our debt relative to the economy is not unsustainable. The path is unsustainable. And we see that in, you've got a very large deficit you're at full employment, and that's expected to continue. So it's important that we, that to be dealt with. It is ultimately a threat to the economy. Now, I can say that. I don't have oversight. We don't have oversight over fiscal policy. I've said it on many occasions, just said it again.
Okay, thank you. I guess the other question is, to follow up on Victoria's question, do you believe the president has the power to fire or demote you, and has the Fed determined the legality of a president demoting at will any of the other governors with leadership positions?
Not permitted under the law.
Not what?
Not permitted under the law.
Thank you.
Courtney.
Courtney Brown from Axios. In response to Howard's question, you said it wasn't an ideal time to give forward guidance because of the economic uncertainties. Can you lay out what some of those uncertainties are and whether or not it includes some of the proposals that the president-elect has put out on the campaign trail? Tariffs, for instance?
No, I was not referring to the new administration's policies at all, nor will I today. So what I'm just saying is, as we look ahead, we know, and I mentioned this in my statement, that the risks are two-sided. I guess I should start by saying that we think that the economy and we think our policy are both in a very good place, And but as you look forward, you say, what are the risks? And one risk is that we would move too quickly and find ourselves having moved too quickly, and inflation comes back, and we lost our chance to get inflation back to 2%. So we have to avoid that risk. And to avoid that risk, that means you want to move carefully. The other risk is that we move too slowly, and that we allow the labor market to weaken too much and do unnecessary damage to the labor market and to people's working lives. That says don't get behind the curve. So these two things are the two risks that we have to manage, and so we're in the middle there. We try to be in the middle and deal with manage both of those. Again, the idea is to support the strength we have in the labor market and in the economy, but also with somewhat less restrictive but still restrictive policy, enable further progress toward our 2% inflation goal. This is a thing where we're meeting by meeting, we're going to be making our assessment of what the right path is. It's not as important. The precise timing of these things is not as important as the overall arc of them. And the arc of them is to move from where we are now to a sense of a more neutral policy. We don't know exactly where that is. We only know it by its works. We're pretty sure it's below where we are now. But as we move further, there will be more uncertainty about where that is, and we're going to move carefully as this goes on, so that we can increase the chances that we will get it right.
Simon.
Thank you, Chair Powell. Simon Rabinovich with The Economist. I know you don't want to share your decomposition of bond yields, but if you look at the break-evens, it is clear that longer-term inflation expectations do seem to have risen, up at about 2.5%, for example, on the 5-year. That's up half a point from when you cut in September. Do you have any concern at all that longer-term inflation expectations are de-anchoring, or put another way, are anchoring at a slightly higher level? Thanks.
So we would be concerned if we thought we saw longer-term inflation expectations anchoring at a higher level. That's not what we're seeing. We're still seeing, between surveys and market readings, broadly consistent with. I looked at the 5-year earlier today, and it's probably moved, but it's just not. It's kind of right where it's been, and also it's pretty close to consistent with 2% PCE inflation. So that's been a traditional one that we look at a lot. But overall, expectations seem to be and really have throughout this in a place that's consistent with 2% inflation. But you're right to say we watch that very carefully, and we will not allow inflation expectations to drift upward. But that's really why we reacted so sharply back in 2022 was to avoid that.
Kelly.
Hi, Chair Powell. Kelly O'Grady, CBS News. We just talked about what you've heard from business leaders on the economy, but many average Americans are still not feeling the strength of the economy in their wallets. So what's your message to them on when they might expect relief?
So you're right that we say the economy is performing well, and it is, but we also know that people are still feeling the effects of high prices, for example. And the world went through a global inflation shock, and inflation went up everywhere, and it stays with you because the price level doesn't come back down. So what that takes is, it takes some years of real wage gains for people to feel better. And that's what we're trying to create. And I think we're well on the road to creating that. Inflation has come way down. The economy is still strong here. Wages are moving up, but at a sustainable level. So it's just, I think what needs to happen is happening, and for the most part has happened. But it'll be some time before people, regain their confidence and feel that. And we don't tell people how to feel about the economy. We completely respect what they're feeling. Those feelings are true. They're accurate. We don't question them. We respect them.
And just a quick follow-up, President-elect Trump has been critical of your performance. Any concern about his influence on the Fed's independence?
I'm not going to get into any of the political things here today, but thank you.
Nancy.
Hi, Chair Powell. Nancy Marshall-Genzer with Marketplace. What is your plan if we start to see stagflation?
Well, so that's the whole plan is not to have stagflation, so we don't have to deal with it. So that is actually our plan. It's of course a very difficult thing because anything you do with interest rates will hurt one side or the other, either the inflation mandate or the employment mandate. I would just say that we've been able to see inflation come down a whole lot, much closer to our goal, without the kind of sharp increase in unemployment that has often accompanied programs of disinflation. So, knock on wood, we've gotten this far without seeing a real weakening in the labor market, and we believe we can complete the inflation task while also keeping the labor market strong, and that, of course, is exactly what we're trying to do.
Can you rule out an interest rate hike next year?
No, I wouldn't rule anything out or in that far away, but that's certainly not our plan. I mean, our baseline expectation is that we'll continue to move gradually down towards neutral, that the economy will continue to grow at a healthy clip, and that the labor market will remain strong. If you look at our that will not change from the September SEP. That is our baseline forecast, and short of some exogenous event, that will continue to be our forecast for the foreseeable future. So, but ultimately, we're not in a world where we can afford to rule things out a full year in advance. There's just too much uncertainty in what we do.
Let's go to Jean for the last question.
Hi, Chair Powell. Jean Young with MNI Market News. I wanted to go back to a comment that you had made about Americans being quite unhappy about the cumulative price level rises over the past few years, even though now inflation is back on a path to 2%. Would it be appropriate for the Fed to undershoot for a while on its inflation goal under the average inflation targeting regime so people have a chance to catch up?
No, that's not the way our framework works. We're aiming for inflation at 2%. We did not think it would be appropriate to deliberately undershoot. And part of the problem there is that low inflation can be a problem too, in a way. But that's not part of our framework, and it's not something we're going to be looking at in our framework review. Thank you very much.
An absolutely fascinating news conference with Chairman Powell. Where do we start? Where do we end? A 25 basis point reduction for the Federal Reserve as anticipated.
So there we go. As we mentioned there, that was exactly as expected. Bart, I've just accepted your friend request on Discord. That's now done. So we're all done there. Portfolio boomed exactly as we said. I also claimed today was Nvidia Day, ahead of schedule. It was. There it is, up nearly 2% today, heading towards $200. I said it would go to 140. It did. It's good to be right all the time, isn't it? Gotta be honest. I'm loving it. Okay, I'm only joking. But nevertheless, I was right, and which is great. The market is looking very, very nice indeed. We got exactly what we wanted. What we've got now is money moving back into defensives, which is great. There's my Coca-Cola coming up, as anticipated. There is some money leaving the the Mag 7, but more money coming in. So people are taking profits. It's being replaced with new buyers, which just protects the top, protects the bottom as well, of course. So that's very nice. So that could keep running. We'll get some sell-offs when it goes a bit higher, though. It's bound to, because we're breaking records just every few seconds, which is amazing. But now we're getting fresh money coming into Coca-Cola defensives, which now means I've got a balance of 131,411. Very, very nice indeed. Very, very nice indeed. So we have two earnings coming up. We have an earnings at the close, Funware on the main channel, Arch Aviation on the extra channel. They're happening in the next 45 minutes. So I need to end this broadcast, put those videos out, and get it done. There's a lot to do. We haven't started yet. There's Funware and ACHR to get ready for, and I want to put these promotional videos out. So I'm going to have to end the stream now. It's a very, very good day. So we're going to have double earnings tonight. This is a wonderful, wonderful, wonderful start to the Santa rally. My word is, don't chase it. You should already be in. This bull market started in January. In fact, it started 18 months ago, but the big acceleration started in January. Of course, Jay Powell was attacked and told, about Donald Trump going to fire you. I mean, at the end of the day, the market is booming. Inflation is coming down. He did a great job. Of course, whatever president is in, whether it's a Democrat or Republican, they'll all say it was because of them. Well, it's already booming. It's been booming for 18 months. So you cannot say, whether you're a Republican or Democrat, you cannot say it's because of who's in power next. It's silly. The market is already booming. It's not booming because Donald Trump's coming in January. The market doesn't work like that. The market has been booming for nearly 18 months. Didn't even know was going to have Donald Trump running for election, let alone win the election. So the economy is strong, not because particularly of Democrat or Republican. It is strong like it is most countries around the world, but the US leads that because we had a pause at the end of COVID. The world went to sleep. We had the markets. Everything cooled down after that. Things crashed all the way down because we had supply issues and all kinds of issues. Inflation made things get more expensive. People overbought with stimulus checks. That was a lot done in America by all that money that was flying around, printing extra money. The markets went to sleep. Now they've all caught up. Now business is taking off again. Inflation is coming down. So you cannot say the economy is not strong. You're looking at it. It's right there. I mean, I only invest in the S&P, and you can see, without any doubt about it, the economy is strong. There you go. Like I said, look at that. Exactly like I said. Money's coming out of tech now. A new money's coming in, which protects the bottom and going into defensives because look at Coca-Cola going up. We've been waiting for this. The balance now is 131,497. This is absolutely fantastic. If I can get any money out of Coca-Cola today, I won't. It won't come quick enough. I will start buying more S&P. Anyway, so there we go. Right, I hope you all enjoyed that. Thank you very much indeed. This will come out as its own video later on as well. We've got a live phone-in for the earnings tonight. Live phone-ins coming up. You can have your say all about the economy, all about Fed Jerome Powell. This video will come out by itself as well. So what we're going to do is clear the deck. We're not going to do day trader of the day because we want to get this out. I've got two videos to get out. One video to get out. Archer Aviation. I've got to get that out to promote that. So the first earnings will start in 40 minutes. The first earnings starts, and then I've got Archer Aviation on the extra channel as well. So I've got to get to work. So let me send everyone now to the extra channel. Yes, we have. We have finished that. That was good. This is awesome. Let me send everyone now to the extra channel. So you can join me. I can be with you as I'm doing the videos, let you know what's going on. Bitcoin's exploding. Everything's exploding now. Let me send you to the extra channel. You can stay with me live that way, and then I can update you as I go, and then I can bring you back in to the shows. On the extra channel, it will go directly into Archer, and also in the extra channel, I'll give you the link to bring you back into Funware. All right, so here is the link to the extra channel. Join me there now. I'm going to be live there now doing all of this. You cannot afford to miss it. What a great day this has turned out to be. So here we go. Extra live now. So join me. We'll have the live phone-ins and everything else. Okay. Extra live now. Let me pin it to the top. Click on that. We're going there now. I'm going to end it really quickly. Get to work. I'll be in extra channel working with you and getting everything done for the the double earnings tonight, as requested by you. No songs, not all in. Okay, I'm reading. I love you. I love you so much. Delph, how you doing? Great to have you here. Love you all too. Can you believe it? Look at this. Absolutely great. I hope you're all making money. It's very difficult not to make money at the moment. If you only own the S&P and defensive now with that Coca-Cola sell-off, you can't really do anything but make money. It's been like this now for nearly 18 months. Okay, join me now on the extra channel. Let's get ready to go. Join me there live. I'll be with you, plus all the extra earnings. Thank you, Leah. Is that a latte? Record-breaking night. Through the roof. Thanks, Leah. Okay, here we go. I'll see you all back in a bit. Join me now on the extra channel, and I'll be with you as fast as I can. Not making money. I'm not. What's going on, Mike? What's going on? What are you watching a different channel, Mike? Mike says, every time you buy the S&P, I buy the VIX. Every time. Bloody hell, Mike, are you watching a different channel? All right, I'm not really making any money. I've just basically turned my phone upside down and then changed the colours to green to make it look good. Anyway, all right, okay. Let's see you back in a second on the extra channel. Bye-bye for now.